Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to late update, late session update that is for Thursday, February 27th, 2025. It is now 2:25 p.m. Eastern Time, so I'm starting the video just going to kind of rifle through some, not random, but a miscellaneous potpourri mix of charts, just things I'm watching, things that, key levels to watch, developments to watch for, etc. Start out with NVDA. NVDA is still a short, long-term swing trade. We shorted that here on the backfill of the deep seek gap, and then on the breakdown there. Earnings are now out of the way, so that sets the stage for the stock to do what it needs to do. And us not, whoever has a position now, you don't have to worry about anything for the next few months. I just had a price alert fire off on NVIDIA, and I'll go over that in a second. So kind of to reiterate, big picture. The last time, NVIDIA is currently testing the 200-day simple moving average. That's the blue line here. The red line just below is the exponential. I like to watch and trade both. And so once those go, that's a pretty good support level. This was also, you can see color-coded yellow, pretty significant level. Kind of defines this trading range that we had here for months, sideways trading range. Remember, we had a big bearish engulfing candle and a divergent high. That's on the daily chart. We had a divergent high on the weekly chart. So, and that was also the purple primary trend breakdown and backtest. So many reasons, in my opinion, to be short and not just, we'll try to micromanage, as I often do, entries and exits on a long-term trend trade. But if you just strip everything away and turn off the noise, whatever you do, look, I've been doing this a long time. Don't listen to the bobbleheads on TV. They are and have been unanimous, mostly bullish, all out on NVIDIA. Yeah, you might get the occasional bear they march out to try to give some semblance of balance on there, but go off the charts, and that's what I do. And fundamentals will follow. As I said months back, if you recall, in one of these videos, several times I said this when the video's coming out, topping out, that they cannot and will not retain this reign, this complete and utter dominance they have on that market. I said the Chinese are, you say what you want about them, but they're resourceful. They figure shit out if they have to copy it, or in some cases they're ahead of us on other technologies. And so, especially when the U.S. started banning NVIDIA chips, and of course they had go-arounds to get them, but they're just going to reverse engineer or come out with a better mousetrap. And of course, so that was, the deep. We'll see if DeepSeek, sticks or not. But that was, it potentially was and still is a potential game changer. Whether it's DeepSeek or any other company, over time, especially when there's, you guys have to imagine how much freaking money is at stake and involved here. And if you don't think the rest of the world, other countries, other companies are going to go after and try to, get a piece of this giant pie. And again, it's not like the latest secret. This has been happening for a while. So that's kind of fundamental ramblings. Okay, so I can, if you're wondering how and why, especially after, again, a blowout quarter, I'll turn on the TV just to hear major earnings reports like this and Fed meetings and listen to Powell talk sometimes. That's it. That's the extent of CNBC or Bloomberg TV watching I do. And, you hear them coming out prating. But okay, so the stock's going to go where it's going to go. What I can tell you definitively, again, I gave you my fundamental ramblings, this is a downtrend. A downtrend is defined as a security making lower highs and lower lows. Now, so we don't have a lower low yet, but if we take out the 200-day moving averages and we take out this previous low, that's why I have a support line there, that will, it'll become more obvious to more people that we are in a downtrend. Now, say what you want about it. We're in a near-term downtrend since this point here. We're in a longer-term uptrend. I'll acknowledge that, a primary bull market, but in a near to intermediate-term downtrend. This was January 7th. That was a beautiful bearish engulfing candle. And we've been zigzagging lower since. So that's it. And so the next, actually, the next sell signal we just got, as I started the video, you might have heard the little bells go off. I started out with this 5-minute chart. So this was pre-earnings here. They ramped up, had the post-earnings volatility. And just had another alert fire off. Let's see what that was. Let me just check real quick because first and foremost, I am a trader, so I'll often pause these videos to take or change trades. Today, SPY. Okay, so either way, this is what I've been watching, and boom, there it is. NVIDIA is now taken out, despite, again, did anybody out there, including myself, expect anything other than a record quarter, blowout earnings, beat the estimates? It's Apple, Alphabet, Meta. That's all they ever do. And so you have to ask yourself if you're baffled as to how a stock can be down after such a blowout quarter. It's because how much of that's priced in. All you have to do is just take a look at the long-term chart and look at where the stock has come from and say, how much is that priced out? And remember that the stock market is very much a forward-looking a mechanism. It discounts, it's priced in all known variables. That's the whole efficient market theory. Now, the markets have been pretty heavily manipulated, especially in recent years. But just, again, if you're wondering how NVIDIA can top, how they can have a record quarter and they're still off the highs from a few months ago, again, that's it. It's all about supply and demand. And, when the last bull has bought his or her share of NVIDIA, who's left to buy? And then at that point, you no longer have anybody but sellers. So anyways, we'll see. These are the long-term targets. I quite often will share, intermediate. You can look at my daily chart here and see key levels. And of course, if you're in it, I imagine most probably were. I don't get a lot of comments on these pre-earnings setups. I've shared several recently. Went short with this SMCI, went short with NVIDIA, gave you AGO today. And those are risky trades. You do that often enough. So quite a few will go against you. Talked about that, but the key is don't go in heavy short. You can always add to a position after. All right, so there's NVIDIA again. If you look at it just on the 60-minute chart, there was the latest up. It's been a series of trendline breaks. These look a lot like Fibonacci fans right there, if you've ever used those lines. And this was the latest one, breakdown, back test, down trend line rejection off the highs, and boom, we just took out yesterday's lows. And that's where logically stops should be. That's how traders work. They look at these previous reaction lows, and those that bought it pre-earnings say, I'll set a stop there. So others will have a stop here, but that's that. All right, not much more to add to it other than it's good to see selling after a blowout quarter like that. It just kind of reaffirms what I'm seeing in the technicals. Now, we'll see. Could be a whipsaw. There is positive divergence. There's a lot of stuff. But remember, on the way down, there are always going to be, just like after when I bottom pick a stock after a bear market ends or a bear trend or a big correction, on the way up, you're always going to get negative divergences. And quite often they get burned through. Same thing with positive divergences. So I'm pointing that out. And if you are a bull in this stock, here, you can buy it again at the 200s, just like I highlighted back in August 5th. We hit the 200s. I said cover NVIDIA there. That's what I was doing, and reverse it to a long. We hit it here. But again, I've shared, unlike back then where I clearly made a post in pre-market that I was covering this and all shorts and reversing this and all other shorts to long positions. I'm not doing that now. I didn't buy the 200 this time. Made it clear I'm expecting most likely a break of the 200s and will look to increase short exposure via either the direct shares I have or NQ. If you want to keep it simple, trade QQQ. It's going to follow NVIDIA. NVIDIA is the king of everything right now, especially the NASDAQ 100. All right, enough on that. I've told you before many times over that SMCI is kind of its little partner in crime. I call it the Robin to NVIDIA being Batman. It's a little sidekick. And it's not mere coincidence. When I look down here on the 60-minute chart, it's just like, here, we can do it on the 5. I just had the 5. It's just like NVIDIA. You had a low yesterday. It tested it again, just like the 5-minute I just showed, and we just took that out. That's not random coincidence. The stock will trade in line with NVIDIA because they are very much related. They don't make chips like NVIDIA. They set up the servers and all that for, people, big companies using NVIDIA. And so they are pretty much intertwined with NVIDIA's fortunes or lack thereof. And so either way, it's I mean, just a great trading vehicle. We've had so many trades on this one since picking the top way back here last year. Got in there and then again there, and we shorted it down, and just most recently we had a short right here, shorted it down. I said 18 in the video or on the post yesterday, in the video of one of the two. It was actually 23. We hit my sold price target for it was a 23% drop, and then shorted it again yesterday on the back test. I'm sorry, that trend line. And so far, if you took that short, it was live during the video, you're up 20% ago. I'll show a little more now. All right, so that's that. Now, positive, well, yeah, positive divergence right here. This stock could turn around and rock tomorrow or today. This is positive divergence. You know me, I love my divergent lows to go long. I love divergent highs to get short, but you got to pick a team sometimes. And if you think stock's going to continue lower, you don't want to step in. You might want to stay short. If I get, remember, I always say this, divergence, positive or negative, meaning bullish or bearish, are not buy and sell signals. They're merely conditions that typically and quite often accompany tradable tops and bottoms. And again, they're commensurate to the time frame they're on. If I look for a 5-minute divergent lower high, I'm looking for a trade that's going to last hours, maybe a couple days. If I'm on the daily chart or the weekly chart, I'm looking for a trade that's going to last weeks or months. And so anyways, that's there. I want to point that out. Now, whether these big long-term aggressive targets, I even gave you this one today. If you just kind of want to see what I see when I look at the long-term charts, this is my SMCI. Again, I posted this as a follow-up under the setup I gave you today. Or I'm sorry, not the setup. Covered that in the video yesterday. Followed up with the price targets today. This is a long-term weekly chart, and this is your primary uptrend line. This was a secondary uptrend line as the stock started going parabolic, right? That's a parabolic advance. You can even have a shorter term there. That one broke down, back tested, rejected, back tested again, rejected so far. And so these are kind of long-term targets. And I know very few, if any, believe this stock can drop 80-something%, but that's what I see in the charts. We've already crossed down. This is a great trend indicator, the PPO, on any time frame, but especially the weekly. I like to use the signal line, which is the 9 EMA. It's the last of the two to cross. And I'm just going to, you look at the 0 line. Sometimes I'll have I'll put a horizontal line a little below or above the 0, depending on how that stock acts. But you can see it does a pretty damn good job. Now, this stock has been in a secular bull trend, so you don't have a lot of visits or periods where it was below there. But if I just simply box it in here, you can see right here, I'm going to start where it crossed down below, and then I want my box tool. I'm trying to grab my box tool. Bear with me. Here it is. All right, so we had a crossover about right here, and it was below, and most of that happened quick. That was big Q4 2018 drop. Since then, the stock has remained above there, but back here, something happened, something different. It changed, it crossed. So this is a bearish trend, and when you're below that, the primary trend, at least by this indicator, is bearish. So, and the stock is already off the highs. All right, enough on that. Again, if you're in it and you want additional targets information, let me know. What else do I want to cover with you? Oh, well, let's talk about, okay, so where I was going, if these longer term, much more aggressive downside targets on NVDA and SMCI are going to play out, I can all but promise you they're only going to play out if QQQ starts to break some of my key support levels I'm talking about, and then my longer term bearish scenario and targets on that play out. So that all comes back to the 60-minute chart. I've been covering quite a bit. I've given you this box, this trading range, telling you, recognize it for what it is. I know that's why I'm assuming that's why posts have been relatively quiet in the last couple of months. And I said it, if it's not your cup of tea, stand aside. Don't try to trade a market that's not your type of market. If you're not an active trader, if you're not comfortable in out trades that are lasting just hours or days, you're going to get chopped to pieces in a trading range. Trend traders just get eaten alive because there is no trend. The trends are on the very short-term time frame. And that's it. So this was a key support level right here. Very important level. Been highlighting about 510.43. We hit it yesterday. We bounced, and now we're below it. Yeah, you got some potential divergence setting up on the 60-minute chart of QQQ. So is it possible, just because I think that sooner than later we're going to make a definitive break out of this trading range, and I believe it'll be to the downside. However, unless that happens, we're still in the range, and the MO in a trading range is typically go long at the bottom of the range, ride it up, and then turn around, close those longs, and short it and ride it down. I mean, that's a simple strategy. Now you can get a little more granular, go down to the 5, 15-minute charts, etc., and you can catch some of these. You can look at the little trend line breaks, and more actively trade that. So kind of what I call micro trades or active trades up and down. But that's it. So that was a divergent high. Send it down here. We have divergence right now. If you look down on the indicator, I'll zoom in. You can see it real closely. And remember, as I like to say, divergence is not a buy signal or a sell signal. An indication, momentum is waning, and we have divergence as we approach the bottom of the range. But based on everything, including but not limited to the long-term charts. So okay, this is a monthly chart of QQQ. As long as I go, I can go to a yearly or quarterly charts, but typically I'll just go out to monthly, meaning every candle is 1 month of price trading history. And this goes back to the mid-90s. So you can see remember, we've been in a one of the greatest secular bull markets of all time, which by no mere coincidence at all coincides with a secular bear market in interest rates that I've highlighted many, many times over, with interest rates peaking in the beginning of the 80s and dropping into the recent lows here. And so that's, again, far from mere coincidence. This is just economics 101. Anybody that's studied the financial markets or has a background will know that falling interest rates is bullish for equities, rising interest rates are bearish. So I've made the case that the secular bear trend in interest rates is most likely ended. Made that case many times, and so therefore that plays into my longer term outlook, which I know is probably more bearish for most people's taste. And again, the timing on those long-term trend calls, that's kind of bigger picture stuff, like 5 to 10 years. I think we're going to look at severe sub-performance on the indexes. If you're planning your retirement and you're retiring in 10 years and you're factoring a 12, 15, 20% of your return, I'm going to wish you luck on it, but I'm going to tell you may want to revisit those numbers unless you're a flexible trader. I welcome bull markets. I welcome bear markets. You just have to be on the right side of it. And then you can produce 12, 20 plus, percent returns. Even as just a, trend swing trader. You active trade that, make over 1,000% a year. All right, so this is an uptrend line right here, primary secular bull market uptrend line, that if and when this one off the 2009, so these were your what we call cyclical bull and bear markets. Cyclical bull, cyclical bear. Doesn't look like a lot, but that was a 55% drop in the financial from 2007 highs to the 09 lows. 84% drop in the NASDAQ 100. So, when I'm talking about a 50% drop, if you're new to this or new to my style of trading, and you think, Randy, you're smoking something, I watch TV I listen to smart people that know this is what they do day in and out. That's why CNBC puts them on there, and nobody's talking about that kind of. In fact, nobody's talking about a bear market in 2025. I'm sorry. They're saying maybe 2026, maybe, or recession. Remember, I made a post today, if you look at the recent comments, as to how this thing works. And it's very, very simple. I believe, now there'll be other catalysts that will be assigned as the cause, but I believe the cause of the next recession, whether it starts this year or next, whenever, probably this year, will simply be the collapsing, the falling stock market. It will be the wealth effect. That's why there's not an analyst out there, an economist that I hear that predicting a recession, or very few in 2025. How can it happen? Right now, unemployment's record low. Earnings are strong. We're on solid footing. I hear it over and over. Again, you give me a 30 and then again a 50% drop down to my targets on the weekly chart in the NASDAQ 100. You're going to see the wealth effect, especially from those that contribute most to GDP. Remember, GDP is over 2/3 of GDP comes from consumer spending. And the bulk of the consumer spending, the bulk of being attributed to GDP, are the wealthy, those that have most of their wealth in the stock and housing market. So if you want to know what can change so drastically, forget about Trump, tariffs, all this, there's always politics going on. It'll be that. I believe that will be the cause. Now, again, they're going to sign it to something else. They're going to sign it to Trump's tariffs or some global event, but again, to me, it's simple. So, and it's also conditional. If we don't get the drop, and the drop's not going to happen unless we break first things first. You've got I'll turn that trend line. It should be a little brighter here. Make it white and nice and fat. Okay, so first things first. We're coming up on this trend line. Very important trend line, comes off the 2023 lows. I've talked about it quite a bit. And the 200, if you can see below there, I'll turn off, the 200-day moving averages, which we have not broken below since the last bear market started. We had the same technical setup. Everybody except us, here, me on the site, and a few others were foaming at the mouth bullish at the highs and saying the market is going to keep going up. Then the technical said otherwise. Again, I've covered this in videos. It's almost uncanny, the technical posture back then, not just on the markets, but on SPY versus QQQ, and also on the big Mag 8, Mag 7 stocks, how two of them first rolled over, took out their 200-day moving averages. The rest of the high flyers quickly came down, and then all the rest of them broke down. And that's when we took out the 200s. And it was simple. We were in a bear trend, just short rallies back to the 200s until they recovered. They recovered there, successfully back tested, and then you buy it. And this was a successful intra-week break with a close back below. So there's been zero violations on a weekly closing basis since we took the 200s back here. That's it. And so we take those out. We're going to start a new downtrend, and based on the technicals, again, you've been sharing these targets for a long time, but some board or another. That's it. T7 still my final target, down around 260, and again, it's going to be about a just rough. Well, I've already said it 100 times, about a 50% drop in the NASDAQ 100 again, and it's all conditional. Okay, I've been talking about that since last year. But I was saying the same thing I am now. We're not going to get there until you need to, first things first, you got to get under the 200s. So let's watch that. And then you're not going to get down to the 200s unless you break the bottom of this trading range right here, right? My red lines, 500 on QQQ, NQ. This is a 60-minute chart right there. Let me go out to my 2-hour. There it is, about 20,650, give or take. And we're getting close. Big positive divergence. So we got to be flexible. I am flexible. I will turn on a dime's notice if something tells me I see something I think I've missed, and might get long. And if we can rally off there, something what would be bullish, for example, other than a successful bounce off there and a rally, and they'll probably buy it once more. Maybe not. But again, it's picking up nickels in front of a steamroller trying to gain bounces at this point, if I'm correct, and we're going to break it sooner than later. So I lose interest in trying to gain bounces off support at the point I think that support level is likely to break very soon or at the next time around. And so now if we do another thing that would be bullish, other than, again, a reversal off there, if they buy it, would be a break below and then a solid recovery, especially if it's confirmed with volume, bullish candlestick reversals, other things. So that's something else I'd look out for, and that's what stops are for. So if something firms up here and we do this and then head to the top of the range, which is really right here, and then break out the new highs and beyond, nobody should be short that whole ride up. But again, this is where I think what's going to happen. And with NVIDIA out of the way now, the Fed kind of on check. Fed's been put in shackles due to inflation coming back as expected. And so, they don't have the gunpowder, the dry powder that they used to have. And so that also opens the door that for those of you that say, well, DC, Trump or the Fed, they're not going to let another bear market happen. I've heard that long enough, and I'll tell you what, they've been postponing a recession for quite a while, with excessive monetary, both fiscal and monetary stimulus. I talked about it before with the last administration running for the first time in I believe history, wartime deficits and peacetime, excessive fiscal and monetary stimulus, all the Biden's big green plan and the CHIP acts and all this kind of stuff. That stimulus from DC is usually saved for times of recession to pull from keeping the economy to go into a deeper recession. So it's almost like giving the patient a bolus of epi, and they don't need it. They're doing well, and you pump them full of too much epi, you're going to put them in cardiac arrest, and that's what they've done to this market. And that's also why we're here. So anyway, long-term fundamental ramblings, but at the end of the day, technicals are rule the roost for me. So that's the level to watch right there, about 20,650. Then you can see the next levels below. Should be lights out down below there. For those of you that only look at QQQ, you can see the same thing. This is a pretty good level here, about 484. These are all support levels that we could either reverse off of, but if and when taken out, should open the door to more downside. And there it is on a simple daily chart. This is a big divergent high. There's the purple box trading range right here. And that's it. And then the 200's just below. Okay, so let's get away from the markets, or at least QQQ. Let's see what happens. Today is Thursday. I'll be very interested to see how we close the week on the weekly charts. That's 4 p.m. tomorrow. And if anything significant happens, I'll let you know. SPY, the S&P 500. I know this is a busy board, but I'll just box in. This is our range. Multi-month, very tight, well-defined trading range. And we are still, you can see there's the two most important levels. I'm going to make this one purple as well here. Just make a big fat purple line. It's roughly here. I'll pull it down where it needs to be a little lower. Okay, so about 581 or so. You can see the bottom of the range. And then you can see this purple uptrend line, again, very significant trend line. On the NASDAQ 100, the trend line comes off the January lows right there. You have the October 2023 lows here, that purple uptrend line that is very significant. It's our current primary uptrend line. And you can see that we've pretty much, let me tweak it here. Come in. I just wanted to capture the bottom of this candle here really well. Let me add it right here. Sorry guys, I'm a bit of a perfectionist when it comes to this. Well, it's nice and tight under that candle. You had that candle right there from August 5th. This candle right here from January 13th. And we've been dancing on it. This is everything I've covered in recent videos. Dance, dance, dance. Boom. That's a red candle. As I speak, there is 1 hour and 7 minutes left in the trading day. To get back on or above the trend line, S&P 500 is going to have to rally about 1.5. Nothing huge. Can do it. But as I like to say, the redder the better. So if we can print today's close here, and again, I'm more concerned about the week. If we can, especially tomorrow, get another red day and close down below 581, it'd be nice. Yeah, so let's see what happens. Remember, I highlighted that every one of the most important diversified indexes last week printed bearish engulfing candles, and so far they're still intact. And I listed that as one of the most simple and effective strategies. I would take this 99 times out of 100. I'll be glad if I'm wrong. A lot of times I pointed out bearish engulfings this year that didn't mark the top. That was one there. But again, we traded it down. At the time, I told you I thought it could be the top. I gave you a final market top range it happened in. But guess what? My plans changed. If you look back on that August 5th low, that post, I said covering all shorts, going to a hard long for that reason. So there's an example where I thought that had the potential to prove to be the top. However, time to cover up shorts. And we're really not that much, relatively speaking, to the entire move, not that much above there. So now we'll see if this one proves to be the top. Ignore these bearish and bullish engulfing candles at your own risk. Remember that we had, when the market bottomed, here on the daily chart, a SPY back here, as highlighted at the time. We had bullish engulfing candles, and NASDAQ and SPY. A huge one. That's it right there. Big old, hopefully you can see that there, that big fat giant bullish engulfing candle with a positive divergence. And so again, there's not a single chart pattern in technical analysis or candlestick pattern that is 100% effective, but these are pretty damn good. And even if, let's just say, and I believe they have a better than 50% success rate, but let's just say it was 50%. That's still phenomenal, because your risk reward is one of the best of any trades. Because if you take that, you take a long when you see a bearish engulfing form before the end of the day with a stop below it, because if we go down below, it's no longer a bottoming stick or a reversal stick. So you had, in that case, let's just say you waited to the end of the day, you had a less than a 5% stop loss to make, and let's just say you're waiting for whatever sell signal you are. That would be, I'm going to grab right here. So on that, you caught a 68% trend out of it. Again, that's if you milk the highs. So easier said than done. But which the highs so far again ended on the weekly chart with the bearish engulfing candles. This is a daily. All right, so we're below the trend line. There's a level to watch there. I covered NVIDIA. I covered SMCI. Bitcoin, let's not forget. I think this is going to have a big psychological impact on the market. This is BRR, the futures. Let me show you the spot. Bitcoin, I've been showing you the crypto itself. Right here, this is a BTC, the crypto itself. Bitcoin, trade on the Paxos exchange. You had a divergent high there. You had a nice healthy correction. You went on to make, just like the stock market, a marginal but still divergent high, marginal new and still divergent high. So in other words, the divergence got bigger. You had divergence there, and the same divergence was even larger at that second high. And a tremendously well-defined support shelf at about 90,900, which just recently broke down, as I pointed out. And I've added some lines here. So this is we had a reaction low. It's a price support level. And I can pull this trend line down if I wanted to and say, let's do that for kicks and giggles. Why did I do that? Because that's the benefit of the doubt. You can see how I had the trend line drawn before. I was catching the bottom of this candle right here, which is a little higher. So I had clipped off. This is, trend line drawing, I always say, is art, not a science. So I had clipped off a little bit of that one to catch that one and had us below there. But this is now my trend line. So I'm going to say we're at dual support. However, we already had a sell signal, so don't get me wrong. It's been going down. Our MSTR trade, which is an indirect or almost a direct proxy play, that's profitable. IBIT, that's profitable. Those have been swing short since late last year, and even before this breakdown. Now this is the next level. So if we break that, you get a little gap in here, but you can see this is my next long-term swing target's about 70, right at about 74,000 on Bitcoin. But again, need to break this. So there's the story in a nutshell. Is we have some pretty decent sell signals in the broad market recently. SPY, QQQ, some of the market leading stocks, various trend line breaks, price support level breaks, some under the 200-day moving averages already, like Microsoft. But you also have, on the flip side, a lot of very good, even in some cases more significant support levels just below, including but not limited to the key 200-day moving averages. So that's it. So if we do bounce, let's say Bitcoin, for example, any bounce back to the 90,900 level will most certainly provide an objective short entry. So this is one potential scenario if the buyers step in here, and then maybe we go into breakdown later. But quite often when the top is in on a hot security, be it NVIDIA, be it Bitcoin especially, things like that, they don't let the longs out. They don't make it easy. And I've covered that. And a lot of the commodities have gone parabolic recently, such as coffee and orange juice and cocoa. they typically, when you go in those parabolic uptrends, the reversal comes pretty hard. So I wouldn't say Bitcoin, at least not on this chart, has gone parabolic, but well, it did actually. I just don't have a parabolic trend line drawn. That's the parabolic advance right there into that divergent high, and then so forth and so on. All right, the other things, I believe I told you I would, and yeah, I did. I just updated gold for you the other day, but gold's clearly broken down on this daily chart here. Again, you have this uptrend line right here. Comes off that low. I'm trying to draw it there. That secondary benefit of the doubt trend line. It looks better on the 60. Here it is. There it is. Breakdown there. Back test. And so I think gold, I believe that a lot of the same folks, as I said recently, that are chock full of NVIDIA and MicroStrategy and Bitcoin also are the same folks that are full of gold. I say that, obviously, I can just look at the chart. They've been going up together. And so if we start to break down, I believe you'll see margin calls across brokerage accounts. And if you're not familiar and you never had one, what happens is your broker says you have a margin call. You have until, depends on your broker, either the end of today or end of whenever, to either wire us money, put money in your account, or sell something. And guess what? If you don't sell it, we will. That's how margin calls work. They're the most beautiful thing when you're short, because then that starts to accelerate selling. And that's one reason that stocks tend to fall faster than they rise, especially in a bull market, and especially in a bull market that's very frothy with a lot of high-flying things such as PLTR, for example. Oh, no, I didn't. Okay, I typed it wrong, but it came out. It's at support. So if you've been wanting to get in this stock, I can point out to you, it's at beautiful uptrend line and price support. However, this is what happens. This is a rush for the exits. When it finally turns, they don't let the longs out or the shorts in. The stock has dropped 30% in just a couple weeks here. And now it's at key support. So if you've been looking to buy this stock, well, you got it on sale right now for 30%. You're at dual support. And I can tell you all day long that is an objective long entry there. You have very, very good dual support. Super well-defined uptrend line, or very well, I should say pretty well. And then excellent price support. Two major reaction highs with a breakaway gap. In my opinion, that's probably what we call an exhaustion gap. You can Google that. There's a continuation gap right there, and that's your breakaway gap. Those are your three main, or maybe, yeah, that was probably the breakaway, or this one right here. You had a little basing pattern, breakaway gap, continuation gap, and then exhaustion gap, I believe. And so, therefore, while it is an objective long, and take it just if you want to, just make sure you don't fall in love with it and you have a stop below there, because that'll be dual support broken. Or if you're bearish, you want to wait for a break of that level, and then you can see my targets where the stock is going next. And so that's it. The only other thing I'll update for you is Mr. VIX. I've shared this one with you on and off in recent months as a trade idea. We've had some tremendously profitable trades on this. And that's only because if you get the timing right, nothing moves as fast and as much as the VIX. And it goes both ways, as I've said. But again, this is just the 60-minute chart, which kind of hone in on our entries and exits. Look for these little divergent lows, and then the rallies that follow. And you can't see it pre-market. That was our last target hit. This is the current trade. I have given you targets on, I think on the daily time frame. Rough targets. Remember, you want to always align targets in this with the spot VIX, and more importantly, in my opinion, with the stock market. If you haven't heard me say this before, it's been my experience that during corrections and bear markets, the VIX will peak before the stock market bottoms. So I will usually exit my VIX longs a day or two before I see, it's kind of not a gut feel, but reading the charts before I plan to, where I anticipate closing out, or at least reversing to game a bounce off my index shorts. Again, what we need to do here, there's a downtrend line. This is VIXY. We need to pop that trend line, and then that should take us up to these targets, T1, to potentially T3. Again, rough targets, because over time you're going to get decay on this because it's an ET, and our ETF that tracks the VIX, the spot VIX, which you can't trade directly, but I do like to chart it to kind of see what's going on. And on the 60-minute chart, you can see we have, just like SPY and QQQ been in a trading range, the VIX has been in a trading range. And just as SPY and QQQ are right now much closer to the bottom of those ranges, meaning the threat for a breakdown right now is infinitely higher than a threat for the of a breakout on the indexes. So therefore, also the threat for a breakout above this trading range in the VIX is higher. The VIX is only going to go so far until and unless QQQ and SPY break down below those trading ranges. So I'm going to wrap it up here. In summary, we're there. We're at support. We may very well bounce. It's not my preferred scenario, but it's one I will adjust to and react to. Or we break down. That's also one I will react to by increasing short exposure. And you have the vehicles. There's individual stocks right now. Pick your favorite risk asset. If there's one I've missed, but like I said, right now, crypto, and then those crypto related stocks, such as what was the one I just mentioned? The MicroStrategy, thank you, MSTR, and others. Those should do very well. Alrighty, I'm gonna wrap it up here. I've done my best to go back. I usually go back a day or two for comments. So if you put something in there a few days earlier, I missed it and I haven't replied to a question that you had or a chart request, let me know. Just go to the most recent post. And oh, on that too, real quick, remember that if you're interested in any trade idea or analysis of something I post on the homepage, quite often I will follow up under there if there's something I missed. For example, on the AGO setup today, there's some comments, some questions and comments I replied to, and others make good points on. And then I also followed up with this one right after shortly after I put the post out there. And you only get notifications on these if you subscribe. There's a subscribe button here somewhere in there. You can subscribe to it. But I said, by the way, the trend line on the daily chart of AGO in the post above is a longer-term trend line that continues to the left of the chart with additional reactions. Here's my weekly chart with some potential longer-term downside targets once that primary uptrend gets clearly taken out. So what I gave you earlier today was a daily chart that included about this much here, and then my official targets on the trade. If you are a long-term swing and trend trader, in other words, let me say this another way. If we clearly take out the 200s and some of my longer term trend indicators start to flip bearish and the evidence mounts that we're likely in the early stages of a much bigger downtrend, then I kind of turn my focus to these long-term charts and I will extend price targets such as this one. Again, they're going to report today. This thing may shoot up tomorrow. Who knows? I already addressed that. And I also made some comments under that post as far as position size and how to manage that risk, why I would take something in front of earnings. I've been doing that quite a bit lately. NVIDIA, SMCI, which was the other one? NVIDIA, Carvana. And so this is the longer term trend line on the chart that I wanted to just point out that it comes all the way back here. This is the COVID lows here and then that previous reaction low. And so if we break that trend line, remember you're breaking a multi-year primary bull market uptrend line. And it's this divergence that even if they pop after earnings, you're still going to have that divergent high. There's 0% near 0% probability that divergence can get taken out. You'd have to gap up, 100%. Not going to do that. Not this stock. It's the nature of it. Anywho, so the divergence is in place. Look for the bearish here. Let me show you. Look for the bearish PPO crossover as well. Basically, if we gap down tomorrow, we're going to take out the trend line. That's it. So it should be good. You can add to positions. This is still my final target on the daily chart here. I just showed you the long-term charts on the targets on the weekly. And then if you turn on the weekly chart and you add the PPO histogram, you can see something else that I use as a trend indicator is that. This is your PPO, and when the PPO makes a bearish cross, meaning the blue line crosses down below the white line, which is a signal line, you've made a bearish PPO crossover, and that's when the histogram will flip from green to red, and it does a good job of defining your trends. Bearish trend, down, bullish trend, up, right? And we've been in a bullish trend. We had a little whipsaw, but now we've had 3 consecutive, this is the 3rd consecutive week the PPO has crossed back bearish. Sometimes you get little whipsaws, and then sometimes you get it. But as of now, it's bearish. So all we need to see to, well, basically we need to see us take out the trend line. I put the highest weighting on the uptrend line there. PPO is just something, again, will help formulate that the trend has changed. And so that's that. Okay, I will wrap it up here. If I missed anything, I'll follow up under this video in the comments section. Or if it's something big that I see, I've been scanning charts, trying to find new trade ideas on a daily basis. I'll get that out to you on a new homepage post. This has been Randy Finney with Right Side of the Chart. Have a great